This is Mike Sullivan. I'm a former IRS agent and teaching instructor with the IRS. I worked at IRS for a decade. I've been in private practice for 4 decades. I'm not tired and old. I'm fired up for my YouTube channel. Anyway, I've worked thousands of cases. I've been on all the major news stations. I have a whole team of former IRS agents, and you can find my information below in the description section. And as a former IRS agent, I was a revenue officer, and I don't know how many cases I work with IRS. I can't even remember. After 10 years, thousands just with being an IRS agent. Today I want to talk to you. Oh, I do my YouTube videos for three reasons. Number one, so you don't get ripped off. There's plenty of people out there who just do not know what they're doing, and they're salespeople, believe it or not, with scripts. They may say what they want, but they may not even be who they say they are. Number two, I like to inform you. Three, give you education. And number four, I like to tell you as a former IRS agent what to beware of, at least so you can make an informative decision on things that you need to make informative decisions about. Today I want to talk to you about the IRS financial statement, how IRS traps you, and a big thing, a big illumination that you need to know. I'm going to talk about the IRS Form 433 AOIC 433A and the 433F and what you need to be aware of. What most people do not know on that financial statement when they fill it out is that you are filling your actual expenses that you have. This is on page 4 or whatever page the expenses are on. This is big. It's very important you know this because it changes the entire face of your financial statement. On the 433 AFOICA, they ask you to put in your expenses. You put in your rent or your mortgage. They put in your food and your clothing. You put in your car payment, what you cost to drive the car, your insurance, da 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 da. What you don't know is IRS is baiting you to put that information in. They're asking you, and you have to because that's what they need to know to make a decision. But what you don't know is that IRS is only going to allow certain expenses. It would help to know what those were before you go ahead and fill the form out, because if you wait a month or two, you may be able to adjust the form and not have so much of an exposure. I'll give you a perfect example. So for IRS, when they go ahead and you put your rent or your mortgage and your expenses in, IRS isn't going to allow those expenses. IRS has a chart that they're going to allow. I'll give you an example. You can go in your toolbar and put in IRS National Standard for Housing and Utilities. Do that when at some point in time so you can see what I'm talking about. So let's say your housing and utilities and all your bills, your housing bills were like $2,800. You're going to go to the IRS. You're going to go into the your browser, and you're going to put in IRS National Standards for Housing and Utilities. That's going to populate a state, and then when you populate the state, you're going to go ahead and populate your county, and then you're going to find out what IRS is going to allow you. Usually, there's a gross difference. So let's say you're spending $3,000 a month. IRS only allows you $2,000 a month. IRS wants $1,000 from you because you didn't meet their standard. The standards are put together by the Department of Labor, and they have those standards for food and clothing. They have the standards for housing and utilities. They have the standards for car payments, and they have the standards for some for medical, depending on your age, and some for car operation cost. So when you go into that financial statement, know that IRS is going to repurpose those for what they want. So when you go on the first page, it's very informative. Second page, IRS just wants your information. And the other thing you need to know is this. When you put a value down for your assets, put the lowest value you can. Do not put what the retail value is. If you're putting in your household values of what your stuff's worth, you got to remember it's what your sale value is. What the last thing you want to do is to go ahead and put a value that's kind of just an average value. So if you're having a car, or you have a car, and you're going to put what you think your car is worth, you want to put the wholesale cost in. You do not want to inflate the value so it looks like you have more equity. One perfect example, one more tip on that. If you have a house and your house is worth, say, 300,000, and IRS says, boy, they may have equity. If you need a new roof, you don't want to put that $300,000 in, because if you really need a new roof and that roof costs 50,000, you want to put that your house is worth 250,000, because you're taking the cost of what you need to have brought up to standard, so IRS knows you don't have that much equity after all. Remember, you want to lower the value legally of your assets by using wholesale values, and more than anything, you want to make sure that you know the national standard. So the best place to understand that is looking at a 433A. When you populate that, pull it up on your screen, look at page 4. And when you look at page 4, you will find out that IRS on the expense side is going to ask for your actual expenses, and there's a column for the IRS only. That's what you have to know. What is IRS going to allow you? Thank you very much. We're available for representation, consultation. We've been doing this a hell of a long time, and we know what we're doing. You want a result, call me. If this information was good, give me a subscription. YouTube loves us to have subscriptions, so I'll ask you for one. Leave me a comment. You want me to do a YouTube? Let me know what YouTube you'd like me to do. Thank you.